Yo, what's up, everybody? Fed Day. It happened. They cut the rate by 25 basis points. Yeah. That was largely expected, everybody. So no big deal. But I got to say this, I was kind of curious because, Trump just got elected. The FOMC members, I think they're pretty much all Democrats. Okay. I know Powell's a Democrat. So I was just wondering if there was going to be some kind of a mini revolt against Trump being elected. In other words, maybe not cutting the rate, or maybe cutting this time and saying we don't know about any more cuts. But that didn't happen. I was really looking to see if we were going to get some kind of a mini revolt in the FOMC members against the new establishment, which is the Republican establishment, okay, the trifecta. But that didn't happen. So we got the rate cut. Fed fund futures now pricing in a 66 or 67% probability of a rate cut in December. That's actually down a little bit from last week, where I think it was like 75% probability, but that's going to fluctuate. And that's going to depend on the data. By the way, there wasn't anything really that I could see in the language of the statement. I didn't listen to Powell's news conference, but there wasn't much volatility, really. Bond market traded a little bit higher today. So no real surprises. And again, it's like the Fed's saying, it's going to be data dependent. Now we got 2 rate cuts under our belt. You had the Bank of England cut rates today. I think we've had already 3 rate cuts by the ECB. You had rate cuts in some of these developing countries this week. There were a bunch of rate cuts. So, this is a slow drain of these interest income transfers globally, basically, that we've had over the last 2 years. It takes time, just like it took time in 2022 for that inflection point where the rate increases led to stronger fiscal transfers, interest income transfers, and that kind of offset the discounting effect of the higher rates. Remember, I said that there are accounting aspects where financial analysts, they look at rate adjustments because they are included in their financial formulas or whatever to give them a determination of forward cash flow. But what I said yesterday and what I've said previously, I think I'm not a professor or anything of finance, but frankly, I think these formulas are flawed. I think they have flaws in them because they only look at the liability side and they don't look at the asset side, which are these interest income transfers. So basically they are valuing financial assets based on the cost of credit, okay, or the cost of servicing debt, and they're not looking at all at the fiscal impact of higher interest rates or lower interest rates for that matter, okay? So with the lower interest rates, they initially mark up the price of financial assets based on their formula, right? But they're not looking at what happens with these interest income flows. You're reducing net income in the economy, all else equal, okay? If you're saying everything else stays the same, but you're reducing interest income, personal interest income's going down. And you could see that very clearly in any kind of a graphic of personal interest income. And vice versa. Over the last 2 years, there's been something like $500 billion of income added via that interest channel. That's a lot, okay? So you had an increase in wages and salaries. You had an increase in rental incomes. obviously, because the population has grown. You don't have enough housing, so landlords can charge more. Plus, you've had the phenomenon of Wall Street buying up all the freaking single-family homes and renting them out. And then you had the interest income transfers. Those were the three big things that led to income growth. Now you're taking one of those things away. So again, I stick by my outlook. We don't know what the policies, I mean, I've been over this now a lot. Every day I talk about this. Like, we don't know what the actual policies are going to be in the new administration. I mean, we're hearing stuff. We're hearing taxes. I mean, we're hearing tariffs. We're hearing tax cuts. You know, we're hearing drill, baby, drill. We're hearing a whole bunch of stuff. I don't know. Like, I'm hearing that stuff. I don't know actually what's going to end up being passed. All right. And here's the other thing, because like, in a broad brush kind of explanation, if I'm going to use that word, where I said, like, if you get spending cuts, but you get tax cuts, they offset. I said it like that. But in actuality, it's really not true. I don't think it's true anyway. And I think I'll be proven right. Because tax cuts primarily go to the benefit of higher income earners, okay? And higher income earners, they generally they take that additional money that they get in form of tax cuts, and it's basically saved in one form or another. Whereas spending cuts really affect the middle and lower income strata, and you know, they need every dollar of income basically to survive. So when you're cutting spending, I think, first of all, it's regressive, okay? It hits, like I said, the middle and lower income strata very hard. And they're the ones who basically spend paycheck to paycheck just to survive. I mean, they're paying their rent, their mortgage, their food, gasoline, transportation, stuff like that. So I think there's more of an impact from spending cuts. So in other words, what I'm saying is, let's say it's dollar for dollar. Let's say you get $1 worth of spending cuts and $1 worth of tax cuts. I think the spending cuts are going to outweigh by a pretty big margin the tax cuts. So in order for it to be kind of equal, to truly offset, either you would have to have smaller spending cuts and bigger tax cuts, or you would, if you have like spending cuts at some level, you would have to have like massive tax cuts and I don't even know if that's going to work, to be honest with you, because again, that goes to the higher income strata. I mean, we've seen that. I said that. Why is it that, you know, the top 1% or whatever they call it, the 1%ers over the last 40 years has seen their wealth grow exponentially compared to the middle class? It's because basically there's been government spending in their direction. It's been directed to them through tax cuts, you know. So, I mean, it's not that hard to figure out. If you have government spending, government large S, you know, supporting one strata of income, the higher earners, over a long period of time, 40 years, then naturally you're going to see the gains in that class go way up relative to the rest of everybody else. I don't think, you know, it takes a genius to figure that out. So if you're going to cut spending, and again, I'm not even talking about any multiplier effect, and there definitely is a multiplier effect. If Elon Musk is going to come in, like he's been saying, he's going to be the government efficiency guy, and he said he's going to cut $2 trillion 2 trillion right there, that's like 7% of GDP. So if you're running at 2.8%, you're automatically down, you're shrinking at a rate of 4.2% without even the multiplier effect. And there is a multiplier effect, like I explained. If I have less income, then the vendors that I frequent, supermarket, department store, whatever, Amazon, they have less income. They got to lay some people off. Those people have less income. They can't spend as much. So again, another round of the income flows that just like trickle through and they expand and you get a multiplier. And most economists say the multiplier is like around 3x, 3 times. So if you're cutting 7%, you really end up cutting like 21%, which means like, what's 21 minus 2.8? Like 19 or 18 point something shrinkage. I mean, that's not a party, folks. That is not a party. So, but now every time there's a cut now, I'm kind of excited because then I follow the numbers in the daily treasury statement every day and see the reduction in interest income flows. Anyway, that's it for today, folks. It's kind of windy here where I am in Florida. We're not getting hit by that hurricane, but you could feel the energy from it, man. It's not even close. These storms are unbelievable. Hopefully, you guys like and subscribe. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.